Dan Williams here. Wanted to explain something that we call the rate stack, and this is important. So here we are, it's almost Christmas 2025, and I want to share with you rates and price, two key concepts, rate and price. You're probably very familiar with rate, but we're going to get into the price a little bit as well. But remember, this is what we refer to as the rate stack. So here is a conventional purchase, 800,000 with 20% down. Very generic, 760, very good credit. It's going to be a primary residence single family unit. So this is going to look at all of our lenders. I work at C2 Financial and we're approved with, I don't know, 60, 70 lenders at this point. And this is going to return results of all of our lenders. Let me scroll down real quick here. Yep, all of these folks we do business with, their different programs, you can see quite a bit. So this rate stack, this concept, let's open United Wholesale who appears at the top. So if we look at let me back up. So if someone calls me today and says, what is your rate today? Well, 7.5 down to 5.25. So I always like to ask, what's most important to you, the lowest rate or the lowest cost? And you want to compare rate, this is the rate, and then price. You see these red and green numbers here. One last thing I'll point to is the principal and interest. This is the mortgage payment. Okay. So if we looked at this rate today at 6.125, the lender is going to give you $1,606 if you choose this rate, if it matches up to your mortgage strategy. And we'll get into more mortgage strategies in future videos, but this is important, the rate and the price. So oddly enough, if we go up to 6.25, they're going to charge you $1,069. And as you can see, as you go up in rate, the lender's going to give you more money. So this is an important concept to grasp as well. And once again, we're not going to get into the weeds on this, but not only when you look at a mortgage strategy, how long you're going to be in the home, how long are you going to be in this loan? So if you think rates are going to come down next year, would you pay $12,000 today to get 5.5 versus 6.125 when the savings is $255 a month? That's a steep price to pay. So most likely you wouldn't. And the reason is, Dan, it doesn't make sense to come out of pocket to save that little each month. But this is the rate stack. Once again, I want to revisit this. We want to talk about rate and price. So how do these prices come about? This is called a Japanese candlestick chart, and this is for the 5% coupon of what's called a mortgage-backed security. And in our world, green is good. That means rates are coming down, red is bad. So as this green escalator goes up, that means mortgage pricing is getting better. So you can correlate that to mortgage rates getting better, but I like to refer to it as mortgage pricing. So let's say pricing got better today. This 6.125 might be paying you $2,000 by the end of the day or $2,500. But this is very volatile. It's just like the stock market. Okay. So this is mortgage backed securities, which are the bonds that determine mortgage pricing. So let's go back to our search one last time. And I'm going to change this FICO from 760 to 660. Remember, 6 1/8 was paying $1,600 to you. Lower FICO scores is going to change the pricing. So while it's searching, we've got a different lender. So United Wholesale must not like this credit score and they don't want to play in that sandbox. But you'll see 6.125 is now charging you $5,700. So we had a $7,000 change just due to that FICO score. Same rate, it's just the price that changed in this example. So this is a quick look at the rate stack. Once again, we can look, what's your rate today? Well, 4.875 all the way up to 8.25. Those are the options. We want to make sure the mortgage strategy we choose for you aligns with your goals, your objectives, and your financial plan. Thanks once again, Dan Williams. I'm here to answer any other questions you may have.